Hi, everyone, and welcome back to Lundy's monthly financial and property update. This month, we're in July 2021. In today's video, we're going to be discussing the current property market, some of those main challenges that we're seeing in the housing market today, and also just looking ahead to the upcoming few months and thinking about how you can best secure your finance in such turbulent times. With me today, and we welcome back David Hyman. He's Lendy Group's CEO and also co-founder. So welcome back, Dave.
Thanks, Sarah. Great to be here again.
We'll dive right in. Earlier in the month, the RBA decided to continue to hold the cash rate at 0.1%. This has been the same since last November and was, on the whole, off the back of some economic data proving that more positive than potentially was expected. Could you share with us some insights on how the housing market is currently performing?
Yeah, sure. Look, I think the summary or the starting point there is it's performing really strongly. So if we look at the most recent CoreLogic data, the June month across all capital cities, we saw an increase of almost 2% in property prices, which is clearly a very, very high rate. If you annualize that, you've got a rate well above 20%. In the financial year to date, it wasn't obviously as strong every single month, is around the 13% mark. I think when we sort of unpack that a little bit and work through what's driving that, and we've talked about this in some of the previous updates, it's really being driven by a couple of things. So first is record low interest rates. We've obviously got rates to borrowers now of sub 2%, and what that really means is for the people looking to upsize their property, people looking to make the jump from renting to buying. That jump is just that little bit easy to make. And CoreLogic also put some data out recently around, or they talk regularly around the rent versus buy affordability piece. And so typically we've seen around 33% of suburbs in Australia, it's more affordable to buy versus rent, or to make mortgage repayments versus renting. And just given where interest rates are, that's now up at almost 40%. So significant amount of demand being driven just purely from the low interest rates. What we're seeing on the other side is, despite the fact that prices are going up significantly, we've still seen constraints on the supply side, so the number of properties on the market. And certainly, as we've seen, the East Coast and more recently Adelaide go into lockdown, we've seen that impact supply levels as well across those markets in particular. As well as starting to impact the auction clearance rates. Obviously, when cities are in lockdown, while the real estate industry can still operate, and we've seen some really, really innovative stuff happen from real estate agents from doing their open for inspections on Instagram Live and that sort of stuff. It's been great to see innovation coming out. It still does hamper both the clearance rates and the amount of stock on market, just as people have a bit more uncertainty.
Thanks. You mentioned there that it's now cheaper to buy than potentially rent for some of us Australians. And I know that there are a lot of us out there thinking about potentially getting into the market. But if we kind of look ahead, and also in the current sort of situation we're faced with, there's a fair few challenges facing the housing market in the next few months. Could you sort of summarize those for us, but also maybe give your point of view on those who are kind of looking to enter the market?
Yeah, absolutely. So look, I think the main theme here really is still COVID. I think if you stopped any Sydney sider in particular, maybe someone from Adelaide as well, not so much Melbourne because they've been in lockdown for a long time in the streets, just 6 weeks ago, I think even the headlines were talking about the model state, or certainly being past the hump, and we're now sitting here in week 5 of lockdown. For what I think was a surprise for many. And so I think if you sort of relay that into the property market, COVID certainly is going to continue to be sort of a headwind of uncertainty across whether you're looking to buy a property, whether you're an investor. In particular, if you're either in one of the industries that's hard hit. So heart goes out to all the small businesses out there that have sort of been open, shut, and it's been great to see everyone innovating, but there's no denying the hit on people's back pocket. That's definitely a challenge. So if you're in that category and you're looking to buy for the first time, that's an issue. To the same token, there's a number of investors out there who had properties in the short-term rental market, and while we've seen great results in the regional areas as Aussies have been, I guess, locked in our gilded cage, so to speak, and been taking advantage of all the sites that Australia has to offer. There are parts of the market that were really geared towards overseas visitors. Some of the more sort of urban coastal areas like Bondi and Manly, etc. So if you owned an Airbnb property there as an investment property, you might be having sort of tough times at the moment. So they're the main areas. And the other one to think about is, despite my comments earlier around some of the really, really low interest rates, what we're still seeing is record household debt levels. So that's going to be a natural headwind as we move forward. And people, despite being able to afford things, as prices continue to increase, they'll just be wary about taking on that extra level of debt, just given the current level of household debt.
Thanks so much. And just to kind of wrap it all up, Dave, there's a relative level of uncertainty. It's the best kind of lending conditions that have been for a while, but the market might not quite be there yet. What would you kind of leave us with in terms of advice for those people who want to sort of secure their best financial future in this space for this month?
There's a number of things we'd suggest people do at the moment to secure their finances. I think starting with refinance. So when we look at the data across the economy, there's over 1 million mortgages taken out each year, of which the vast majority are purchases. And that leaves something like 300,000 to 400,000 refinances every year. And when we relate that to the number of mortgages that exist in the market of about 6 million, it means that only a small percentage of people are actually refinancing every year. So given where rates have come down to and the significant discounts that people can get on their loan, if you haven't refinanced in the last couple of years, it's definitely recommended that you do so. When we look at the Lendy data, customers are saving almost a whole percentage point when they refinance. So there's a significant incentive to do so if you haven't done so in the last couple of years. The next point would be around cashback offers. So a number of lenders, because it's so competitive in the market at the moment, a number of lenders out there are offering cashback offers, and sometimes these cashback offers are actually per property. So if you've got more than one property or investment properties, etc., the amount of cashback you could be getting could exceed $10,000. And then I think the final thing is, if you're in one of those parts of the market where you're struggling or you've either lost your job, you've been stood down, or your small business has had to close its doors due to COVID, don't be afraid to speak to the lenders around mortgage deferral. Their specialist teams have been really well trained on this and have well-established processes on what to do and how to assist you. And deferral might not be the right option, but our first recommendation is either speak to your broker or speak to your lender, because there's plenty of different options out there for you.
Thanks so much, Dave. As always, really sound advice and a great view of the market and where we're sitting today in what could be only described as relatively turbulent times with a lot of unknowns as we sort of face into the second half of FY21. Thank you very much for tuning in today. Depending on where you are in Australia right now, we hope you're staying safe, doing okay, and managing through these relatively interesting times and hopefully better times to come. Thanks so much. Take care.